Hey everyone, so sorry for the late update. I meant to make this earlier, but what I wanted to say is that today, and when I say today, I mean Monday, the 26th of September, it still feels like Sunday to me, should be quite an interesting day. So if we just jump into the daily chart now, Jesus Christ, ignore all of this mess. Every single time I've had big wins, it's nearly always been a Monday. And one of the situations I tend to look for is the dollar bursting up just before a Friday or on a Friday. And when that dollar does do that, everything else drops in comparison. So, and what we saw on Friday is the pretty much all the indices dumping. And they dumped into the closing bell on Friday. And so that's the S&P 500, we have the Dow Jones, that absolutely dumped. The NASDAQ, everything fell. And it's quite interesting, all of my little doodles, they're all hitting their targets, especially this S&P 500. I drew this channel, this little red box and that arrow back in sort of July time. Seems to have followed my arrow pretty well. Anyway, we've got a lot more falling to come. However, as I was saying, what I look out for is massive falling on a Friday up to the closing bell. And what happens during the weekend, loads of people put sell orders to their stockbrokers and whatnot. And on the Monday, you tend to see a bit of a follow through and also a sharp reversal. So don't forget, there will be a sharp reversal, but I'm personally expecting a bit more of a sell-off on Monday. So if we look at Bitcoin, let's now have a look at Bitcoin. We've got a bit of a compression here, but as I said in that Twitter post I put up probably a couple of weeks ago, that this is simply another fractal playing out. So this fractal here, so basically that whole move there is just playing out over here. So we're having a bit of on the 4-hour chart, a bit of a compression. So, in fact, if we just get an empty chart with no doodles, stand by. Oh. I thought this would be a naked chart. Right, let's just get rid of some of these doodles. It seems like I draw on everything. Yeah, so here we've got a bit of a symmetrical compression. So if we have a little play with some lines, excuse my cruddy lines, but if we do something like this, and by the way, this particular trend line goes back a lot further. Yeah, as you can see, we're having a bit of a compression, so we should see some break to the downside, in my opinion. Now, technically, with a symmetrical compression, the bias is 50%, so if you were to simply dissect that compression, it's pretty much a flat line. It's either way. However, the fact that it's as part of this fractal and in a steep falling market, we have higher propensity to have a bit of a play to the downside. Now, personally, I'm expecting, if we go back to my main Bitcoin chart that I doodle around with, the next big leg down is around sort of 16 to 17k, by which point I'm expecting a bit of a fanning around a bit. Now, this is a very messy chart, although we have lots of levels of support below it. So, for example, there's doing this on a mobile phone is not ideal, but 14k, there's another level, but what I call the Gandalf level is at 12k. So if we look at this on the weekly, it's probably easier to see. That 12k level is the Gandalf level. Thou shalt not pass, etc. But having said that, we have this trend line around here. So there is going to be one hell of a support around here. So if there's going to be a bounce, it's most likely going to be around there. But either way, again, looking at this weekly chart, remember, the bear market will end when this resistance level is breached. So whether we have a bounce from now or whether it's 16k or 12k, it doesn't really matter. We are literally towards the bottom sort of month, or I reckon we've got another one, or I reckon we have another 4 to let's have a think, 4 to 16 weeks of more falling. So either this month or another couple of months of falling, but either way we are going to start exiting this bottoming sort of pattern by the end of the year, basically, and we should sort of have a bit of a dribble to the out sideways, which should, and that dribbling sideways will create a bit of a bottoming pattern, and then we should start to see the beginnings of a recovery in 2023. So yeah, no all-time highs or anything this year, no recovery this year. There's a whole world of pain coming on with the stock markets. When you look at the global macro environment, there's literally no good signs. And the interesting thing, which I always find hilarious, is that in order to work out your real value, so real net real world value and purchasing power, i.e. wealth, you got to divide everything by M2, as in US M2. And when you look at the S&P 500 on its own, everyone thinks that they're freaking Billy Big Balls, that, you know, I bought the stock market in 2010 and it's gone from 800 to, what is it now, 3693, and everyone feels, patting themselves on the back, giving themselves a congratulatory wank or whatnot, but most people don't even do that divided by M2. And when you divide it by M2, as in the currency supply, you'll see that the stock market has actually done nothing. So this horizontal red line is where we are now, current price, and when you look sideways, that red line, we are literally at the bottom of the tech bubble crash in 2002. So we're no better off than in 2002 as we're bottoming out there. Or even we're like at the beginning of the crash of the 2008 subprime mortgage collapse. It is absolutely ridiculous how everyone thinks they're Billy Big Balls and they made loads of money on the stock market when they haven't. We've gone sideways basically for the last 20 years. And everyone also says that with property, everyone's like thinking they're Gordon Gekko and Warren Buffett with houses. But when you look at, so if you have a look at house prices, right? So again, bear in mind this is the weekly chart. So this particular is the house price index year on year. Doesn't look too pretty, does it? It's not the sort of picture that everyone puts out to be. However, when you look at GBHPI, so have a look at GBHPI, which a lot of people, GBHPI, no, let's type this in again. So United Kingdom house, Jesus Christ, house price, HPI, yeah. So this is the United Kingdom House Price Index. So it's like the FTSE 100, but for houses. So this is the average, it is the housing price index really in the UK. So you look at this and go, 1984 is around $40 or £40. And now in 2022, we're sat there at 507, and it looks amazing. And some people have somewhat fooled themselves that property always goes up, but it doesn't. You have to also understand that the currency supply has been expanding at a ridiculous rate, roughly to the tune of 15% per year, since 1975, sorry. So you have to always measure everything up against M2. So when you look at the United Kingdom House Price Index, compared to M2, the UK currency supply, this is the picture you get. So basically, from 1987, house prices have actually been falling. And this is why you have to be aware of cycles. So, and you should never just stick with one asset. This is what, I mean, some people criticize that I flip-flop from asset to asset every decade or so, but it's because I'm looking at cycles and relative value. So right now, Yeah, so basically, if you exited housing in sort of 1990, that's a good idea. And then if you bought houses in sort of 1997, great. And then sold in 2004, even better. And then sat tight, and then bought again in 2012, and then, hey, sold now. It's quite interesting that there's a strong level of resistance where we are right now. And when also, another thing to back that up, which I find quite interesting, is if you have a look at mortgage applications in the UK, they're spiking at the moment. There's a bit of a spike, which is interesting. Now, from a technical pattern, this is a rising compression, so as my arrows say here, we should have a mass sell-off soon. Well, a mortgage application sell-off, reduction. So even though that's spiking, when you look at the amount of mortgages being approved, it doesn't look too good, does it? We are having a sharp decline in mortgages being disapproved, which is why, they're getting rid of all these stamp duty things for, with the new budget and whatnot. They're trying to just keep it going. It's, I guess we're having another subprime mortgage collapse. A slightly softer one, but it's not good. The credit market's freezing up, and it's not pretty. And again, you can just have a look at Bitcoin and compare that to, say, let's do that. So Bitcoin, and you divide that by US M2. M2, this one, enter. There we go. So this is Bitcoin against the US currency supply expansion. And as you can see, right now, in real terms, if I get rid of all these sort of bars, this current crypto crash is the biggest crypto crash I think we've ever had in terms of percentage growth. So you can see this is the 2008 one, the 18, then we had the 2020, and then obviously the 2021 double top. And when we're looking at that base support in terms of M2, we're almost there. We've got a bit more falling. So yeah, this one's been pretty brutal. But we're at the bottom chunk of this bear market now. I can't see this lasting too much longer. And I'm literally waiting for all the moon boys, the old moon boys, to start shouting, oh, Bitcoin's going to zero. That's not going to happen. So yeah, right. Sorry for the late update. Hopefully you get this in time. I've got a whole bunch of shorts on at the moment, so I'm putting my money where my own mouth is, and yeah, I think Ether's one of them. Yeah, call that. Look at the 4-hour chart. Sorry. Yeah, so we've had a mini base support breach here. Doesn't look too interesting for the moment, but we will see. Yeah, Bitcoin's having a little move down there. Where is it? Axie, I think I've shorted at an SLP, utter shitcoin SLP. I love shorting shitcoins. Don't worry, ignore that. There's no take profit. I'm letting this run. But yeah, right. Toodles. Have a good day. Bye.